Good afternoon, I'm Brett Wilsey, and welcome to the Monday edition of the Smart Investing Daily Briefing. Well, today we're talking about, yes, it's that time again, back to school shopping numbers. And this was kind of surprising, some of these numbers that came out. This wasn't too much of a surprise. 83% of supplies are bought before school starts. I think that is the way it probably should be, is buy them before you go back to school. But a couple of surprises. 45% technology is bought online. So people aren't going to stores to buy technology. Almost half are buying online. And this one was a surprise as well. 31% of school clothing is bought online as well. Now, I don't like to buy my clothing online because it never seems to fit right. But 31% of people, yeah, will buy the school clothes online. And then the last one, school supplies, 87% are bought in stores. So if you're looking for businesses, you want to find businesses that sell school supplies, probably not technology when it comes to school shopping. So school supplies like pens, paper, protractors, if they still use those, maybe they don't, they're still bought in the stores. So also today we're talking about Caesars Entertainment for the company today. Now some big news here. They came out today, actually Judge came out today and said they're going to force this company to pay $11 billion back to the bondholders of a previous thing they did back, and they kind of did some finagling and so forth. They thought maybe they're out of the woods, but they're not. They owe an additional $11 billion to the bondholders. We can see at one point this stock was up to about $28 a share. For the last year, it's a high of $9.91, a low of $5.39. Current price on $6.35. We see this big fall here. And yes, this is Caesars Entertainment, which you know they got that beautiful casino in Las Vegas. They also have, they're known for the World Series of Poker. They own that. They also have 14,000, well, let me get to the chart here and kind of show you. They also have 14,000 slots in their 12 casinos and 1,200 tables. Now keep in mind, just because they have to file bankruptcy, which is not done yet, but it appears going that way, doesn't mean the casino is going to go away. They'll operate under a bankruptcy code. Probably someone will come in and buy the assets for a very low price. What this does mean if they go to bankruptcy is the shareholders lose all their money. So you're going to see that stock start trading pretty wild because people want to get out, get something rather than nothing at all. Look at some other numbers on Caesars. We see the sales are down 41%, earnings down 125%, so not very good there. And I want to point this out too because their balance sheet is kind of crazy. Accrued expenses, $1.9 billion. Last year, $759, so their expenses are increasing. They can't pay their expenses. The debt, not inclusive of the $11 billion they owe, $6.9 billion in debt. Equity, $673 million. Look at this number here. Last year, $1.8 billion. So this kind of shows you another company that's having financial problems, and they're still going to be around. You're going to still see Caesars in Las Vegas, and I think they're also in New Jersey. But what it means is that the shareholders will lose all their investments. So be careful if you own Caesars Entertainment. And I highly do not recommend you jump in and try to buy Caesars because it's not going to probably come out of this. Bankruptcy is not a good place to be. So I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like a free report on the 5 big mistakes investors make, give us a call at 858-546-4306 or go to our website, smartinvesting2000.com.